Hey guys, Ken Perry with the Knowledge Coop, and I thought I would give you some pretty crazy information that just came out of the CFPB. And what I'd like to do is just educate you a little bit and then give you some challenges of how you can actually take this information and use it to your advantage. The CFPB just did a mass study of the consumers. Now, you know that they're called the Consumer Financial Protection Bureau because they are all about the consumer, right? And so they wanted to find out what the consumer does when they're looking for a loan. So they did a quick survey of tons of consumers, and they said, asked them questions like, what makes you shop for a loan? How much information do you have about the mortgage industry? Where do you get that information? Let me give you the basic facts that they came up with, or the basic results they came up with through this study. Number one, almost half of consumers fail to shop around before applying for a mortgage. I don't know that I'm that surprised about this, but almost half of consumers don't shop before they get to you. Kind of interesting. It's just so you guys know, the relationship matters. And what they found as part of the study is if they already have a banking relationship or some sort of relationship with a client, or with a company, they're less likely to shop. So if you guys have clients, they want to go to you and they're not going to shop you simply because they used you before if you establish the right relationship with them. If you're not establishing a relationship with them, you don't get the benefit of that statistic. Are you with me? So if you guys have a client that loves you, they're less likely to shop. That's a result that they just pulled out of this survey. What they also found was 3 out of 4 consumers only apply with one lender or broker. Now, I think this is interesting because I hear from a lot of loan officers that borrowers shop you all the time. Well, in this survey, they found that they actually don't. 3 out of 4 borrowers end up just using the company that they initially applied with, and they're not even shopping that person. So if you give them the right information and hold on to them, they're actually not going to shop as much as we think. I think that the shoppers make us really upset, or the shoppers make us, we kind of focus on them and it feels like it's more of them, but really they're not shopping as much as we think. Most consumers get their information from lenders or brokers who have a stake in the consumer. Now, that's a quote from the CFPB. CFPB in their study said if they have a relationship with the person, they're going to ask them for their education. And what they found is 70% of consumers report relying on their lender or mortgage broker to get the information about mortgages. 70% of your clients and people who shop for mortgages and are looking for a loan rely on the information given to them from their lender. And so if that information is accurate, they're relying on that, they're trusting in that. CFPB is saying this is a bad thing. And the reason they're saying it's a bad thing is because the consumer doesn't know that the lender has a stake in the loan funding. And of course, the assumption here is that the lender is going to hurt them or that was air quotes, that's awesome, hurt them, or they're going to tell them lies or going to mislead them or whatever because of the trust situation. That's kind of the underlying assumption here, when really you're just giving them great information and they want to stay with you. But you could see this getting out of hand. If you've got a really bad loan officer, borrower comes to them, they're telling them lies, 70% of these people or so are not looking elsewhere to find out if that's a lie. They just trust whatever their lender told them. So the CFPB is doing something about this. They've created a website for borrowers to shop for mortgages. And it's not so that they can shop to get them funded. This website allows them to shop for the average interest rate that's available to them based on their current circumstances, such as down payment and credit score and all that stuff. Big problems here is that the credit score is whatever they think it is. They get to input their own credit score. They're not pulling credit. So if they just came off some hack website that gave them an 880 credit score that doesn't even exist in reality, they're going to punch that number in and assume that they can get the better interest rates. If they're saying, well, maybe it's 10% down, but they're not thinking about the cash they need for closing costs, then they're going to put that number in and be a little bit confused as well. And when you run your loan through here as a consumer, and I did this yesterday, as a consumer, I'm seeing what the rates should be based on what lenders are offering. So how do they get those rates? They actually go out to one provider who gathers up all these rates and then feeds them to the CFPB. So the CFPB is trusting what this provider is telling them. And if you look at the way that they're picking up these rates, they're doing each rate that's quoted. They don't give you the company name, but they give you what the rate is that's being offered based on those criteria. They give you the rate that's being offered with a half discount or a half rebate, somewhere in that range. There's no APR, it's straight up no rate. And so when I did this yesterday, and here's where I want you to really pay attention. If you're a loan officer, focus here. If you're marketing, sales, this is all for you. What I found out is I pulled up the rate sheet and I grabbed my loan officer and I called her up on the phone and I said, hey, it's a loan officer I've used forever. She has a very low comp plan. She has very low rates. And so I called her up and I said, hey, what's your rate today based on these scenarios? Like I put the exact scenario into the CFPB. Do you know that my loan officer who has a great, low rate, low comp plan, she was in the best rate today. She can offer me the best rate available on the CFPB website. It lined up perfectly with what she's offering. And so then we looked at, well, what would other loan officers offer? And if you take a higher rate plan, the higher up you go, the more locked out of that you are. In fact, the highest rate plan that I've seen is actually higher than what the CFPB says the average is. So the CFPB says, look, your range is going to be 3 3/4 to 4.5. And they say 3 lenders offer 3 3/4, 2 lenders offer 3 7/8, and they just kind of walk you through all that. Well, think about this. If you have the highest comp plan available, you're always going to lose if the borrower sees the CFPB website. If you are the lowest comp plan available, you're going to use that CFPB website to send it to your clients and say, look, as you can see, if you go elsewhere, you're going to get either what I'm offering you exactly, or you're going to get worse. So it's kind of my argument that this will decrease shopping for consumers if the consumer first lands on a loan officer who has the lowest comp plan. Kind of a big deal. You guys go check out the website, and why I'm telling you this is figure out where you are. You know, what comp plan are you offering? Are you competitive out there? And just know that if the borrower sees that website, you're going to have to defend yourself. And believe me, when they see that website, they're not going to tell the system, because there's no way to do it, that they have a foreclosure, a bankruptcy, that they're buying it from their relative. I mean, there's so many details that are missing there. All they're going to do is pull off that website, the lowest rate available. And they're going to call you and say, why can't you give that to me? You've got to be able to defend it, and you've got to be able to make your argument. And the bottom line is, if you are a higher rate, you better be able to explain why you're a higher rate, or you're going to lose that deal. Because what the CFPB did here is said, we want you to shop because the biggest thing that matters to you in a mortgage is the rate. And that's a shame that they went out with that message. So hopefully you guys check out that website. Hopefully you can make a plan around this. You guys have a great day, and we'll see you in the coop.